Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 6:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 25th day of October, 2024, and this is the evening report for gold and silver, our weekend review. First and foremost, I wish to thank all of our subscribers for your patience and loyalty during this difficult period of having a knee replacement on the 14th and then another surgery a couple of days ago. My strength has returned, and I do believe I will be able to get back to our full docket of reports within a week. Again, I appreciate your loyalty, and I thank you for your patience. Over the last 2 days, gold has had a remarkable recovery, gaining back everything but $3 shy of the record close that occurred on Tuesday. Today, gold, basis the most active December contract, gained $12 and is currently fixed at $2,760.80. Spot gold also had phenomenal gains throughout the week, recovering from the sell-off on Wednesday, gaining $11.33 today, closing at $2,747.07. All of that occurred despite dollar strength, with the dollar gaining 0.30% today, taking the index to 104.403. Lastly, silver has been fairly flat over the last couple of days. Today it had a gain of 1.5 cents, taking the most active December contract to $33.88. Due to the uncertainty of the presidential elections, as well as the increasing tension in the Middle East, this week in gold has been resilient and strong. After hitting the all-time record high in closing price on Tuesday, after having a $20 plus gain, we had a strong decline on Wednesday by about $38. However, on Thursday and Friday, we have seen a strong recovery, with gold currently fixed at around $2,760, about $3 shy from the all-time record close. Also, we have a 2-day pattern called a piercing line, and the confirmation of that pattern today, suggesting that we will see gold move higher next week, and we have not yet seen the conclusion to this final primary fifth wave of this remarkable rally in gold. We are looking at an 8-hour candlestick chart of gold, and on today's show, I want to focus upon the most recent movement from about the 9th day of October, when I believe we concluded our primary fourth wave and began our final primary fifth wave. The way I see it is the first part of this rally, in other words, the move in gold from these lows that came in at $2,620 up to the peak this week, was an intermediate first wave, the first wave composing our subcount of our primary fifth wave. The deep correction on Wednesday marked the corrective second wave, and we are currently on our third intermediate wave of 5 total waves, which will complete the primary fifth wave. Based upon what I've just spoken about, what I am about to present is one of the potential outcomes for this final leg of the rally. The way that this model will look at it is that we have completed our fourth wave and we are in our primary fifth wave. As you know, I believe that this primary fifth wave will take gold to $2,865 or, in fact, possibly higher. And this model is one possible outcome. The first thing that we're going to look at is a basic Fibonacci extension of what we're labeling as wave 1, when gold traded from 2620 up to this top. at $27.75, and we're going to start the extension from these lows that came in on Wednesday. If this next intermediate third wave is simply the size of the first wave, that would take us to $28.65. As you can see, this model projects that it could go much higher than that, but the way I am looking at it in terms of the potential is as follows. Wave 1 complete, the possibility that wave 2 is completed, although that is not a certainty. We could be witnessing an ABC and have a further decline. Our number 3 wave should take us somewhere around $2,820. A correction will follow that, and of course that will have to be above this conclusion of wave 1 and the final burst to $28.65 or higher to occur after the election, and if we get closer to a resolution to the conflict in the Middle East. Next week, we will discuss other potential models for how this will unfold, with the knowledge that we have these two primary events guiding the direction of gold.
The price action of silver this week can be summed up in a single word, and that word is consolidation. We got a new high on Tuesday this week above $35, but on Wednesday we had a steep correction, taking it over 3% lower along with gold the same day. Following that correction, however, we have two doji candles that are signaling, in my opinion, consolidation, and the important thing is they are consolidating above the previous highs, which were resistance. So we are getting consolidation, confirming that what was resistance should now be support. I still see silver reaching $40 to $42 by the end of this year, beginning of next.
This has been Gary Wagner
and Joseph Wagner,
wishing you, as always, good trading. We will talk to you next week for the latest in gold and silver and our evening reports.